Welcome back. This is our third segment, and in this segment, we will look at the trade of the week. This is for October 14th, 2023. And again, you will see that there are repetitions. A lot of, you can use opportunities, whether you use futures or you use options, and I will share that with you. First of all, is our usual gap trade. Every time you can see our gaps actually get filled. I mean, we look at Friday, we had a nice jump up and then we filled it. And then, of course, we had the sell off. So that's our gap trade. Every week, I'll share that with you, and you can see that majority of time they work. The second thing is we have our CPI trade, which tells us, this is in the 5 minutes, sometimes happens in the first minute. The top or the bottom of the day generally happen within that 5 minutes. So this is our 5 minute, this purple color that I have here is our range and is the bracket. Once we break through one of those brackets, it's a good time to take a trade. So what we could see here, again, this became our, this was the high of the day, so we never got there, and the low of the day, it basically, it held, and then once we broke down, it became a resistance. I mean, we would have probably stopped out here, but then after that, you could see you would have taken this beautiful trade. I want to go one step further. This is the 5 minutes, and then take a look at this. If you use a 10-minute bar, now that bottom became a resistance, and this is on Friday, and you see this doji, and on a 10-minute bar, that would have given us heads up, and it's a beautiful trade. And believe it or not, this comes from our NFP numbers. So basically just a food for thought that how, again, you can take advantage of these strategies. The third thing is one of the reasons, if if you recall, we do this Thursday gold trade religiously. And the reasoning behind that, this fundamental reason, is markets do not like uncertainty on the weekends. So basically, they want to protect themselves. So the logic will be, well, let's buy something on Friday and sell it on Monday. We get protection. The problem is it could be 50-50 because, well, something didn't happen. And especially if you do options, then, you have the theta, the time value, you lose the premium. And then if you do, again, ETFs or cash or futures, it is 50-50. So we came with this idea, why don't we do it on Thursday and get out of it by latest on Friday, late afternoon, if you have to, and just close it. So generally, people start moving in Friday morning. Sometimes we think of Thursday. So this is what happened. This is a chart. Again, you have to remember, this is a 60-minute our Ichimoku. And this is what happened on Wednesday. We broke above the cloud. We've been in the cloud the previous couple of days. This is even before the hostilities happened. This is our Fridays. And then Friday, we broke above our standard and turning line, and we moved and we stayed on top, above that. So here's Wednesday, and then we broke below the turning line, but above the standard line. But what happened? So we don't know if Friday is going to be up. We're just using the strategy, and I've said it before. I think our idea is to be right 75 to 80% of the time, and our again, our risk is pretty defined. It's the premium that we pay. I do not have stop loss on that. It's pure premium to get like home runs like this. So we purchased it right here, and I put my limits. As you can see, this huge up gap happened. So I had my 25, 50, 7,500 plus. They all got hit. Now, on a hindsight, actually they got hit at like 3.92, $3.92. I think I bought them at 55 cents or so. So would have been another, my God, that's another 50% moved up. So on a hindsight, should have had that runner, and this would have been a beautiful trade. But that it was a beautiful trade. And then, oh, this was the early one. I'm sorry. This one I got at 75. This one I got in the morning, as religiously I do, and I noticed, things I was watching, and that's the reason lately I've only done 5 contracts. I decided to do 10 contracts that day. So I came in the afternoon. So this is what it is. I came in the afternoon before the close. I said, well, I'm going to buy another 5 because with all these geopolitics, who knows what will happen. And the price was good because the markets were, like you can see, on October 12th, they actually dropped. You see that? So I said, well, with all that, I'm going to add more. And that's when I actually added more. And then because it was so late by that time, by the time I come and put my limits in, it was done. So I just got in, it was too late. So basically the next day I just sold it at the market, and it was not bad. I made quite a bit more from the opening. So that worked out for my taste, especially the other ones I had done it early. Oh, no, this is not. Yeah, this one. Oh, I see what happened. No, this one, the other one I did, I put the limits in. This one, I put it for the day rather than good till cancel. So you get lucky that way. Yeah, that's what happened. This one I did catch. I did put the limits in, and this one I put it for the day, so it worked out very well. But because I had, so there's no sorrow, that one worked out. So this is the bottom line. So I did have my trades at 7:17 a.m. and 12:51 a.m. Average cost was about 65 cents for the 10, and we got out about 420. So it was about 536%, on 650 profit of 3,500. So it wasn't a bad day, but all you need is one of these, every couple of months or 3 months to, that just makes for, if you're, and we haven't had that many, and if you've had, especially if you do your target, a lot of times the same day on Thursday, targets get hit. Some of them, at least half of it. So your risk is pretty limited and defined. So, but there are days like this, which takes care of, a few months of maybe losses. So anyway, so I just want to share that with you. ETF of the week, last week, of course, with the gold, the gold miners were up 7.2%. Of course, if you have gold fields, it would have been 25%. Makes sense. The underperformer was the iShares of Israel, AIS, was down 9.2%. And then the second best was the natural gas. We just talked about that. It was up 7.1. Interesting that the healthcare momentum ETF was underperforming, was down 8.9%. It's interesting. As far as the ETFs, we just mentioned the EIS. So I just want to show you a chart that it is down about 13% year to date. So granted, you see this big drop. Obviously, there's a lot of concerns, but it has, since 2023 started, it has been under pressure to begin with. So there's been, there's a lot of technology and security softwares and cybersecurity is produced there. But we got rejected at that 50 month moving average. I was looking at monthly. So you can see where we have been. This was COVID times. We are back, if avoiding that. I mean, there hasn't been a lot, but this was a huge move. And then we've had a big sell-off since top in 2022. So, and then these are some of the holdings just for your, you can see a lot of technology involved here. Stock of the week, I don't have any recommendation like last week, but I do want to share something like, JP Morgan surprised the markets in a good way. And you see how it was a big move. It was as high as 153, and then it closed very close to the low of the day. So this is a big reversal, but we are above, it's almost like a wedge. We broke above that huge volume. Obviously, it was earnings. We did break above the 50-day moving average. So this is something I would put on your radar. So watch for that. But again, there's a consumer sentiment. The other thing is Tesla is coming with their earnings. So we want to pay attention to that. So we want to look at the linear regression channel. We see how it has respected that. And then with the earnings coming up, we don't want to be in a trade at this moment unless you play some of our strategies, especially the volatility, implied volatility, which I can share with you. So these are the past 8 quarters. Obviously, you can see actual versus what the Wall Street has expected. It has beaten it. Sometimes been very close. And you have to remember, this is what Wall Street shows, but there's this whisper number. So you want to take that into account. So that's why you see we've had a gap down. When the earning came, gap down. This one was a gap up, gap down, then came back, recoup, gap up. So basically just food for thought, and you can see how the implied volatility for those 10 days versus historical volatility has done. So the implied volatility was really high after the earning comes, and this is the strategy you should use. And we'll discuss that a little bit. Some of the candidates, for instance. And then this is where we are on the cloud. You see it's the red, and then we got rejected. This goes back to the October earnings when we gapped down. So that has created a little resistance. So watch for that earnings. And then also Apple, the reason I just want to share this with you, beautiful move. September is always a nasty month for Apple historically, but October is pretty good. But we have it in a red cloud with a resistance. So just be aware of that. So once we break this, then that will be a good sign. But right now we have that resistance at the cloud. All right, so a scan of the week, we are at mid caps 400. There's quite a few candidates with nice setup. So just for your weekend entertainment. But then we got quite a few earnings in different industries, but especially and sectors, especially we still got the financials this week, heavy duty. We got Charles Schwab, we got Bank of America, we got Goldman Sachs, BNY, and then the US Bank Corp. And then we will end up with American Express, for instance. So those are big ones. We got Tesla and Netflix coming after close. So there's quite a few good ones coming up. So pay attention to that. This is our volatility charts as far as upcoming. Yeah, I mean, take a look at the average volatilities, like on Netflix, for instance. Could you play calendars with this? So just some good candidates. So, and then these are, as always, we look at what the earning whispers predict or expect. So Tesla expected to again beat estimates, their history. So this is for your again for your weekend research. Netflix, Bank of America, Charles Schwab, Lockheed Martin, would be interesting to know, United Airlines and AT&T, ASML, and Goldman Sachs. So with that in mind, I hope that was helpful. I really appreciate your attention. I hope these are useful for you, and wish you a wonderful weekend, a safe and healthy one as well. Have a great, great weekend. Bye-bye.